How's it going, West Market Solutions? This is our closing market commentary for Friday, October the 20th. Thanks for joining us here. Markets have closed and not going to be good on Monday for the cattle market. That's where we're going to start off our commentary here. This is a chart of cattle futures. Notice we've been holding this uptrend in here. I think on Monday we're going to break through this low that was charted earlier in the week. Now the cash trade news is not bad, but the cattle on feed numbers are bad. This low is charted on Wednesday, 114.52, so it's about $2 lower than where we're at currently, and we are, I think, probably going to break through that on Monday after this report has been released and digested. So if that happens, we break this little uptrend that we've got going on the continuation charts, and we'll find some support down here, 113. Of course, we won't be able to get there because of limit conditions on Monday, but I could certainly see us closing below this trend line here and below this low. Now, let's look at the reasons why. What's going on? Here's the report summary. 105 is the on-feed number. That's a little bit above the average trade gas, a lot above last month. So we've got more cattle on feed than a month ago. You look at this number here, this placed number, 113.5. Look at our average guess, 108. Holy cow, that is a huge number. 113 versus 108, big difference in numbers there. And then previous month, 102.6. So we placed a heck of a lot of cattle in here. And in fact, the on-feed number here, 105.4, that's the highest in 5 years. The placements right here, 113.5, the highest in the last 6 years. So these are some negative numbers. It's going to hurt December, February, probably bleed into April. As you know, it's going to be somewhat friendly. I shouldn't say friendly, but it's somewhat supportive to the front month that we are marketing cattle pretty aggressively. That's the good thing. But the fact that we have so many cattle on feed and placement numbers, these two categories, that is what's really bearish in here. Marketing's slightly higher than expected, 102.6, so no big change there, but it's the highest in 7 years, so this is positive that we are marketing our cattle aggressively as we are, but that is what's going to factor into the markets come on Monday. Grain trade here, there's some things I want to point out as well. Let's go to the soybean market here, outside day lower. Look at that. I want to mark this here. Outside reversal there, that is certainly bearish. The market's oversold. You can tell it's oversold here, but it's bearish just to have this reversal. And we've got support just below this market, about 976 or so. That is an area that could and should hopefully hold. Otherwise, we're going to come back and test this uptrend line once again. Now, it's very possible, you can see here, we're going to roll because of the delivery period at the end of the month. So maybe we can kind of bleed down into this. And if we get into deliveries, that's when we can expect the next rally. But until then, I think we work our way lower from 978, probably drifting back to at least another dime. But we were down 8 cents just in single day today. A couple other charts, and just wish I had more positive news, but look at this corn, 344. I've drawn this forever, since August 31. Drew this across here. We came right down and closed at 344 and a quarter. So this is the lowest close we've had on these charts going back here, 345 on August the 30th. Certainly a negative close there. Bearish, any way you want to spin it, not a positive, but boy, we're right here on support. We're oversold. Maybe we can bounce out of here, but yields are coming in better than expected, so no reason really to think we're going to rally. Did have some decent export business this morning, 198,000 beans to China, 120,000 corn to Spain, 125,000 corn to an unknown. Did little today to support us as we were down nearly 5 cents. And finally, let's look at a chart of Kansas City wheat. Kind of the same technical pattern as corn. Back here on August 29th, August 30th, we drew this low around 420. We've came down, tested it, and reversed out of there. Now we've done it again. We're closing at 422 and 3/4. That is going to be the lowest close going all the way back here. There is not a lower close on these continuation charts. This is the lowest close we've had in this chart pattern. So certainly a negative. We've got support a couple cents below us. We're oversold. Maybe we'll bounce out of here, but there's not enough news really to sustain any rally attempts. That is for sure. All right, hope you've had a great day of trade. We'll look forward to Sunday night and Monday. We're going to get some rain this weekend, it looks, but looks like. Have a great weekend, and we'll talk to you soon. Brian Hoops from Midwest Markets.